Okay. So I'm coming to you from the realtor side of it, and I'm going to be presenting my side and letting everyone speak and educate you on their expertise. Okay. Buying a home is one of the biggest purchases you're ever going to make. And we all want you to be educated in making that decision. Okay. So let me share my screen. No further ado. I don't see anybody trying to get in. Just want to make sure. Don't get anybody out. Okay. All right, are we good? Can everybody see my screen and our lovely president of the Houston chapter? So I always want to start off giving thanks. Okay, thank you, BGSC Houston. We're the best. We're the best club out of all of them anyways. But I'm grateful for the opportunity to be able to present the home buyer Zoom to you all. So I'm a realtor. You guys know me as Danny. In the rest of my life, I'm a realtor. Outside of that, I'm a stay-at-home mom before this of 4 children. Got into real estate and just fell in love with it, you all. This is my passion. And one of the primary reasons that I got into it is to create generational wealth for me and mine. And so I love the fact that I can spread that information so that others can do the same. I am with Legacy Homes and Properties, and this is our home buyer Zoom. Now, I know a lot of people are questioning right now with COVID and the world seeming to come to a halt. Can I purchase a home during a pandemic? Okay. We're going to answer that question for you. We're going to educate you to make that decision, that final decision for yourself. Okay. And just to give you a little bit, just to give you guys a little bit of information about the company that I work with Legacy Homes and Property. We are the largest African-American brokerage here in Houston, Texas, with over 70 licensed professionals, okay? Combined, we have over 400 lifetime transactions. That's both on the buyer side, the selling side, and the investment side. So we're very well equipped to handle any needs that come our way. We also are able to offer additional support. Okay, and that's what I wanted to show you guys today. Like I was telling Kristen, I'm bringing you guys some very educated people, experts in their field. They're powerful. They know what they're doing, and we have this as a service that we offer to all of our clients. So whatever your need is associated with purchasing a home, we're able to facilitate those needs for you. So in credit repair today, our expert is Miss BreJeanna Webb. Our mortgage lender expert today is Glen Reeves. Our insurance broker today is Leigh Alexander. Our title company expert is Craine. But we also have other services that we can help you out with: photography, interior design. Sometimes you buy a home, you're like, I like the house, but I want to knock down this wall. I want to do X, Y, and Z. Okay, we can give you recommendations for that. Driving services, we've incorporated, this is new one for us. A lot of times we experience clients that didn't want to interact a lot because of COVID. They didn't want to come to buildings or meet with a lot of people. So we installed or added on to our service a driving service. We will drive to you wherever you're comfortable, okay? And make sure the deal happens. But your comfort, your safety, your peace of mind is something that we honor, and is necessary because it can get stressful when purchasing a home. And so anything that we can do to make that process smoother, we will, okay? and so on and so forth. I'm not gonna read all of those to you, okay? So this is, I'm sorry guys, this thing is like in my way. I can't even read my whole screen. Okay, so can I buy a home during a pandemic? And I wanted to show you guys some headlines so you don't have to just take our word for it that you can do. Because I'm gonna tell you, yes, the time to buy is now, today. You thinking about it? Yes, buy a house, okay? But to give you guys some real life headlines about what is going on in the Houston real estate market, I added these to our presentation. So this is current. This is the Houston Association of Realtors press release of August of 2020, okay? And I'll just touch on some of the bullet points so I can get the other speakers in to give you their information, okay? So I'm going to bullet point number 2. The single family home median price climbed 7.6% to 269K. That means home prices are going up, okay? While the average price rose 7.8% to 334,000. And that's what we're seeing. Prices keep going up. I just got emails from a couple of builders that I work with, Balmoral, which is on the northeast side. Prices are going up. Lumber is going up. So builders are passing on those costs to the clients, okay? And both of these figures, they are record highs for an August, period. Just August in general, because we have seasons like every other business. And typically this is not one of our busier seasons, but this August it is. Homes priced, at 750,000 and above, they enjoyed the greatest sales volume. So I know it sounds contrary to what we hear in the news about unemployment and, you know, businesses like Victoria's Secret going out of business, you know, stuff like that. People are still buying homes and those prices are still going up, okay? Even townhomes and condominium sales edged up. And that final bullet point, you guys, Houston's leased properties market slowed in August. Okay, leases of single family homes fell 13.3% year over year, while leases of townhomes and condominiums declined 13.7%. Okay. Hello, Samsung. I don't see your name, but hello, welcome. Here's another headline. Builder confidence reaches historic all-time high in September. Builders still building. People are still buying, okay? So let me explain to you guys the types of real estate that is out there. The one that we're most familiar with, single family property homes, right? But there's also townhomes and condominiums. The townhomes may or may not be detached. I've seen a lot of communities where they're actually trying to do standalone land. This is when you want to start maybe building your dream home. Maybe you want to invest. You know, we can go into detail with all that, but we got a lot of people on here. So I'm not going to run my mouth too much. I'm going to share. Multifamily properties. This is a duplex. Manufactured homes. Okay. These, you guys, are starting to look better and better as the years go by. There's some manufactured homes that you wouldn't even believe are manufactured homes. And this little diamond in the rough for investment properties. I know some of you may be like me and love HGTV, Fixer Upper, and the Brothers and all that. This is for you all that are interested in investment properties, looking for what we call drive-bys, looking for homes like this to fix and flip. So those are the types of real estates out there. Why home ownership? For one, you have an appreciating asset. Okay. Two, you're taking advantage of today's rates, which have been reported to be at all-time lows. Okay, I know that's kind of weird during COVID, but that's what the market stipulates. Ownership, you have options. You know, when you're renting from someone, you don't have a lot of options. I don't know if you guys have been paying attention to the news, but the sunset moratorium has come up for renters, and there were a lot of evictions. And there was a family that made a lot of news here in Houston. It was like a single mom of 4 kids who got put out. And so they did a group fund. Is it a GoFundMe page for her and her kids, and got her a place to stay because she was renting. She had no options. Can you imagine? You know, that's devastating. You can avoid the rising rental rates, and they keep going up, and they're not going to necessarily remodel your house or remodel your place that you're renting or give you anything more, but you have to pay more year after year. And it's beneficial in retirement years. Here, this survey came in March of 2020 of the top areas to live in Houston. Got somebody else. Hang on, guys. Hi, Nina. Welcome. So the top 10 areas are here, with the main 3 being the Woodlands, Katy, and Sugar Land. And I know some of you all live in those areas, because I'm like, who lives over here in the Northeast by me? You're like, nah, we're over here. But I will tell you that the North is also developing off 45, like Conroe. Woodforest is very popular. So, and those are the rest, but those are the top 3. Alrighty, I'm done running my mouth for now. I'm gonna pass it over to Glen Reeves. He's our mortgage expert. And you guys, let me tell you, this man here has saved some deals, okay? Literally I'm just put it out there. He's saved my butt on a couple of deals, you know, because he knows his stuff. He knows his information. And I trust anything that he tells me. Whatever he tells me or the client to do, that's what we're doing. Glen Reeves, he's our senior loan officer with Prime Lending. There's his contact information there. And you all, I can send you everyone's contact information, okay? I'll make sure you have everybody's info. Glen, I'm gonna pass the mic over to you, sir. Do I need to turn it over to host? Do you need to share your screen, or shall I just?
Yeah, listen, when it comes down to this fancy technology stuff, I'm not great on that. So
No
sharing screen and all of that, I don't need to do that. If you guys can hear me, I'll just be talking. First, Danny, thank you for inviting me to be on the call on the Zoom. I've been doing this business now 17 years. And while I think I've seen it all, COVID has introduced some new things that I had never seen before. But it is true that this is a great time to make your purchase. The thing that I want to tell you a little bit about, I don't talk a lot about prime lending, because prime lending is just my conduit. I talk a lot about my abilities, but prime lending is the source that we use. It is prime lending is a division of Plains Capital Bank out of Dallas, Texas, and we are the #1 purchase money lender in the state of Texas. And again, my value to you guys is myself, not prime lending. So I go out of my way to try to assist you as a realtor, also you as a buyer, to make sure that your transaction is smooth. Now, the thing that I want to talk about today is the loan application process. Down to the point of optical mark recognition. That is when an application is taken and when documents are provided. Everyone pretty much works off of their cell phones. And so most people are trying to take pictures and sending documents and all of that to get the loan process started. The first thing is that loan application. And as a realtor, if you've got a client and you're going to refer them, that loan application process is very, very important. And while a lot of realtors say, hey, I'll leave that whole process to my lender, with the information that Danny has given, everyone is overwhelmed with loans and housing and everything. And so with interest rates being as low as they are now, refinances are being added to these transactions, and they're overwhelming not just the lender, but the lender's pipelines, getting things through in a proper manner. So that loan application process, encourage anyone who is going to apply for a mortgage loan, please remind them that they're not applying for a car. Application must be completed in its entirety. Do not leave anything off. Anything that one may deem not to be important could possibly make or break the pre-qualification process. The more information that is provided to your loan officer, to your lender, the easier it is to get the process complete. So when you get an individual during these times that apply for a loan and have missing information, with the volume that loan officers are experiencing today, they just set it aside and they move on to the next person who completed the application correctly. And so whereby a realtor typically may not get involved in that process, if you want your deals completed and processed, make sure you are telling your clients to fill that application out with all due diligence, okay? Because that is when it comes time to uploading the documentation to get it to the loan officer, it's important that it be scanned in a PDF format, of which most items can actually be taken from a PDF format straight from whatever website one is using to gather the information. Okay, so, and the reason for that is the optical mark recognition. If the documents are clean and clear, they're not in a JPEG format, they're not in an HTML link, they're in a straight PDF format, the optical mark recognition will read it just like your ACT tests and those tests that you take for school. And therefore, it automatically gives the information to the loan officer and makes it easier and make the process quicker. Okay? So encourage them to follow the instructions that are given in the email for processing the application. And I know it's tough because, listen, a lot of realtors don't read their emails. Well, not all of it. They kind of scan read it, and you get so used to doing that you don't realize the important information that you missed. So get used to telling your clients to make sure that they read, and make sure you as a realtor start reading as well. Okay, so that's kind of like the application process. That process can take normally 48 hours. During COVID, with all of the volume, it's taking at least minimum a week. And depending on the time of the month that your application is submitted, if it's near the end of the month, it could possibly take longer. Okay, so that's the application process. The next thing that I wanted to talk about was the credit scores. Your credit score requirement now has changed since COVID came into play. Minimum credit scores for a conventional loan, and keep in mind, most of this is average, but for what I'm talking about is what's specific to prime lending. So the credit score for prime lending is for conventional financing is a 620. All other financing is a 640. And those days of 580s and 600s and all of that it's over right now for prime lending. We might eventually go back to 620 across the board. Here's what you'll find. Do not bank on individuals with 620 credit scores being able to get approved for a conventional loan. They have tightened the belt on conventional financing. And where it used to be as easy as doing an FHA loan, it is no longer that easy. Excuse me a minute. Debt to income ratios on conventional financing until last week, you could do it at a 50%. And that's even for individuals that had credit scores as high as 760. Now I'm finding in the last week that even conventional financing is not wanting to exceed 45% debt ratios. FHA is the winner for financing during these times. One can still get an FHA loan with a 640 credit score and a 56, almost 57% debt to income ratio, provided that they have a minimum of 2 months of reserves if they go over 50%. But getting an FHA loan up to 49 or 50% financing, you can get that all day long, 640 credit score, no reserves required. So FHA is not the ideal kind of financing one wants when they have good credit and when they have assets. But I'm telling you that it's harder to get the conventional financing. Please, 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 as a realtor, make sure that you are not afraid to ask your clients if they have earnest money. I know it scares some realtors to death. They'll ask, do you have it? And the client will answer yes. And the next question immediately should be, where is it? Can you produce a document to verify that you have it? And it seems like you're getting into the lender's side of things, but the fact is that you are securing your contract when it comes time to give that earnest money to the title company right after that contract is consummated. The other thing, realtors, normally your contract is almost written for a 45-day consummation, which is pretty standard, even though everybody say 30 days. We recognize that in this time, it's 45 days, and now you should be anticipating a minimum of about 50 days because you have to get past your option period. Okay, so make sure that you are setting the right expectation for your contracts. Question on the floor is, will my student loans affect my DTI? They absolutely will. The rule of thumb now, even with the CARES Act in place, has not changed the investor's guidelines. The investor guidelines still require that the balance owed on your student loan be offset with a payment of 1%, except for Freddie Mac conventional financing. That requirement is 0.5% of the balance owed on your student loan. Again, those are tough they're very, very tough to get, very tough to qualify. So FHA really is the rule of thumb. Plan on 1% of the balance that's owed on your student loan that you are not required to make a payment on. It is in forbearance, it is in deferment, it's on something, some income deferred program. 1% is going to be required where FHA is concerned, and it does not matter what kind of a program you're on. Conventional financing, some of them will take your IBR or your IDR, but again, they are tough to get qualified. You'd asked me that question 2 weeks ago, I would have told you, hey, come on, let's do it on conventional as long as you've got the IBRs or the forbearances or the deferment. Not the case today. Okay. Let's see. Are there any other questions while we're there? Or is there anything else anyone want me to cover? The other thing that I wanted to talk about was savings. If you are going to purchase a home, start saving money. Minimum down payments for FHA is 3.5%. Minimum down payment on conventional is 3%. I always recommend 5% on conventional financing. And this is 5% and 3.5% of the purchase price of the home that you're purchasing. It's important to know that you can save several ways, straight into your savings accounts. Also, you can save through 401ks, and you can take loans out against the 401k and pay yourself back through payroll deduction with interest. And you can also take hardship withdrawals when you're buying your primary home. But whatever home your client is looking at, you should do the math, 3.5% of that purchase price, and just straight out ask them, hey, do you have $7,000 saved, $8,000 saved, whatever it may be when you do your math? And make them show you where that money is. Okay? Down payment assistance, almost difficult, almost impossible now to get a down payment assistance without a 640 credit score. You'll go out to your basic ones that everybody use, your T-Shack, Texas some housing something. I don't even know what it stands for, but it's T in Tom, S is in Sam, A is in Apple, H is in Henry, C is in Charlie. You can just Google that. Any realtor can do it. Any homeowner can do it. The other one is a 5-star Advantage, and 5 is the number 5, not the word. 5-star Advantage program is with Seth, S-E-T like in Tom, H like in Henry. It is Southeast Texas Housing. They've got 3 programs available that I know to be very useful. The 5-star Advantage program, the TDHCA, which I think is Texas Department of Housing of some kind. Let's say 2, actually, it's 2 of those. Those are very lucrative. They have very low interest rates right now, in some cases lower than the standard rate. Okay, did I see a question come up that I missed it? If so, if someone put it back on the screen again. But the down payment assistance program, listen to me, free is never free. Free is never free. It's free money to you that you do not have to pay back, but you pay for it either in interest rates, because normally they are higher than your standard rate, or you pay for it with fees. And the other place where you pay is time. They take a little bit longer than your standard loan. And they have their own set of criteria, and they control the interest rate. What is earnest money used for? That's a great question. To keep you earnest or honest. Now, it really, what it says is listen, I have good intentions, and I'm going to take this money and put it against the contract so that you understand that I am serious. And if you are buying a home, you need to know that it is a serious matter. You are getting into a contract, a legal binding contract. So it's not time to be playing around, talking about I want this house today and put an offer on it and get in that and all of that. Jumping around, you're gonna lose your money. It is 1% of the purchase price. You know, that's typical in the industry, that the earnest money is 1% of the purchase price that you negotiate. But I am seeing that there are some places, and especially if you're dealing with builders, they are asking for more than that. There are some places that are asking for 2%. Some of that stuff is absorbent and it's not allowed in the industry, but builders kind of get away with whatever they choose. So always be prepared for 2%. And if you don't use it, great. You can use it towards your home inspections. You can use it toward any other ancillary things that need to happen prior to you getting your loan in place. And by the way, lenders never require that you get a home inspection. But just because the house is a new home, do not forego your inspection. There's horror stories out there where people have foregone inspections, found out later that air conditioners were put in houses upside down, all kinds of stuff. And you'll find sometimes the brand new home has more problems than a home that's a resale that's 2 or 3 or 4 years old. Always get a home inspection, but lenders don't require it. Lenders require appraisals to make sure that you do not pay more for the home than what the home is worth. Okay? So your down payment assistance programs, again, you can get as little as 2% of your loan amount toward the purchase of the house and your closing cost, and as much as 5%. And the interest rates range anywhere from 2.75, 2.75 right now, all the way up to 3.625. That's the highest I've seen in the DPAs. Okay? That's kind of what I have, Danny.
Thank you.
To talk about.
Thank you, Glenn. And that was a good segue. Sorry, I'm echoing. That was a good segue to our next speaker, Henry. I know you were having some issues with your microphone. I'm not sure. Henry, can you say hello? Let's see if he's in the chat.
Yeah, Henry is a guy you want to get to love. he's the guy that's checking that house out for you, and you definitely want to trust the things that he tell you about that house. You know, some of this stuff is going to be cosmetic for him or for you, but there's some of that stuff is serious, and if he recommend on that inspection report that they be done, then you make sure it's done.
You guys, I don't think we can hear Henry right now. Okay, Henry, we're going to come back to you. Yeah.
Maybe he can try calling your phone. I don't know if you're on your phone. Maybe he can call your phone and talk through your speaker.
Henry, can you try that, please? Thank you guys for the great suggestions. Maybe I can just call him.
Yeah, that would work probably.
So I'm on my laptop though. Let's see.
Well, I can hear the phone ringing.
Okay.
So your speaker's pretty good.
Hi, Henry. We still couldn't hear you, so I'm calling you now.
Hear me now? Okay.
You guys give me a thumbs up if you can hear Henry.
We can hear him. Just push it close to your computer.
Yes. Can you guys hear me now?
Yes, we
Yes.
got thumbs up, Henry. Everybody, this is our expert inspector, Henry, and I hope I don't mess up your last name because I always call him Henry. Henry, I'll be cheating. Henry Ijomah. Did I pronounce it right?
Yes.
We can't hear Henry. We can hear you.
Okay. Shall I start?
Now we can hear Henry.
Okay. All right. My name is Henry Ijomah, and I'm a real estate inspector, and also an engineer. I'm here to speak to you, you guys. I'm frozen.
It was me. You guys, I'm out in Conroe. Bear with me. Keep going, Henry. We're back.
Okay.
Yeah.
All right. Okay, so inspection is one of the best things anybody can do in the purchase of a home. Whether it is a resale home, a new construction,
We saw that car. So this is a bedroom, not a formal.
are you guys still hearing me?
Yeah.
We can hear you. You got a lot of background noise, but we can hear you.
Yes. So, in regard to a resale home, the inspection covers everything in the house. And it brings out all the faults that have taken place that needs to be, ratified before the buyer sign off.
Stay right there.
Hello?
Yeah, stay right there. Keep your phone right there. That's perfect.
Okay, stay right here.
Yes.
Be where I am. Okay.
Yes.
Okay. All right. So inspection is one of the best things anybody can do to eliminate surprises. The inspector will check the condition of the home and report to the client and to the agent. Now, not everything is significant in a real estate inspection, but everything will be in the report. There are some major systems that will be addressed, and the insignificant ones, minor things that somebody can live with, or wait for some time before fixing it. So, especially in a pre-existing homes, the inspector checks everything and report on it. That said, inspection is really not an insurance on a home, which some people think that when a house is inspected, that everything is covered. No, because after some time, something may go wrong down the road. it does not mean the inspector did not inspect it at that time. It was inspected, and real estate inspection is practically a visual inspection. You know, condition of the system at the time the inspector was in the house. So that is what it is. With regard to new construction, yes, an inspection is needed. And I will not go into details on all the procedures because there are two types of inspection for new construction. One is what we call a phase inspection, which can be scheduled 3 times from the time they break ground. Now, or one full inspection when the house is completed. Now, a lot of people will believe that a new house will not have any problem. That is true, logically, but there are some things that may be omitted at the time of construction. Those are the things the inspector will bring out, and the builders will correct it before the buyer's final walkthrough. Now, let me explain. In the construction of a home, there are many subcontractors that are involved, and they all work along with one superintendent of construction. You have the foundation people, you have the framers, you have the electrical, plumber, mechanical systems, and the roofers. These are all different subcontractors, and they come in at different times. Each are working diligently and at a very fast pace in order to maximize profit. Now, it is impossible that during the time all these people are coming in, chances are something will be omitted. And that's where inspection comes through, you know, and bring that provision out, and the builder will correct it. Now, it could be improper installation of the system, or lack of insulation in the attic, or the foundation, you know, which is placed, but not all of them are placed absolutely level. However, you know, you cannot have a slab that is placed absolutely zero. But sometimes some builders put a significant deviation in the slab. Such type of deviation is not what will be corrected, but it is important that the buyer knows about it, so that when the house settles down the road, it wouldn't be a factor. So this is what inspection is. You know, we try to eliminate surprises as much as possible, and give the buyer that peace of mind to purchase a home. Now, everything can be negotiated. That's the work of the agent, the realtor, you know, meet with the sellers, and they can work everything out. So inspection is really one of the most important things anybody can do in the purchase of a home. Sometimes people think that a house is appraised, and an appraiser came out, inspected the house, that is an inspection. No, two different things. The appraiser is looking for value. It's not looking for defects or things that are broken down. And the inspection that they do is very minimal. Most of them are from the FHA. They have their own rules. So appraisal is value, inspection is looking for defects. So that is what it is. And On the new construction, I did mention about the space inspection. Step one is when the ground is broke and foundation layout is set up, the inspector comes out to inspect, make sure everything is in order as the engineer and an architect specified in the blueprint. Then it gives the GA to go ahead. Then the framers come in, set up the framing. While the framing is there, the electrical and the mechanical systems, plumbing comes in to drill for their wiring and all sort of stuff. The inspector comes back after all that is done and check if everything is done right. Or did they drill too much on a stud? Or anything that has been not put very well, including the insulation. Some of the woods may be rotted. You may probably request that they be changed. And after that, they go ahead, they go ahead and they close the walls. You will not see those things again. Then the next inspection will be when the house is completed. And that time we check the system installation and everything. So those are the things that inspectors do. I guess that is all. I have covered everything. We'll be ready to take questions if there is any.
Let me check the chat if you guys have any questions about the inspection. And this is part of the process that happens. Hang on, Henry, I'm gonna have to mute you.
Yes.
This is a part of the process that happens as you're building or when you found a property that you want, like a resale property. So the questions will come as the process is further along. But right now, Henry, we don't have any questions in the chat.
Okay.
So thank you so much, Henry.
You're welcome. So sorry, this connection was not good. I will look further into this.
Yeah, it's okay. It's okay. These things happen. It's technology. We do the best we can. Nothing's like in person, but you know, we're doing the best we can.
I have not done a lot of Zoom.
Oh, I see.
Yes. While I was setting it up, I probably killed my audio.
Oh, I see. Okay. No worries, sir. No worries. If I get any questions, I will definitely send them your way because I will not attempt to answer any inspection questions other than the general ones. I got the general ones covered, but nothing specific.
All right. Yeah. Any questions? I'll put my phone. Do you want me to leave the phone line on?
No, because I think it's gonna echo. It's probably just better with the one device you have.
Okay.
Okay. I'm hanging.
Are you all able to hear me?
Was everybody able to hear Henry? I know it's kind of ring back and all that.
Yeah, that ringing and echo was pretty loud.
So sorry. I'm so sorry, guys. Okay, Henry. We're gonna have to give you guys a PDF version. Okay, thank you, Henry. I'm gonna hang up the phone.
All right.
Okay, thank you. Again, my apologies. Technology today, guys. We do the best we can. Up next, and they have audio. So we're gonna move along to the insurance side of it. Guys, welcome. One of my dear friends, super smart lady, mom like me, handling it all, doing it all. Leigh Alexander, she's now with Goosehead Insurance. Take it away, Leigh.
Hi, Danny. Thanks for having me. I'm really excited to be here. So I work for Goosehead. We are one of the fastest growing insurance agencies in the country. And the thing that makes us different is that we're essentially a brokerage firm, and we can shop your insurance around. We have about 80 different carriers. So we can make sure that we are not just getting you the best rate, but we're also getting you the proper insurance coverage. So one of the things with buying a home, you have to have insurance when you are getting a home mortgage. A lot of people, I find, tend to take the path of least resistance, and they'll just call whoever they have for their auto insurance and say, hey, I need homeowners insurance. What can you do for me? And a lot of times when this happens is either you're paying a really high premium, or you don't have the right coverage. And sometimes you don't even know really what coverages you have. And that's really important to know, because it's one of those things that you don't really need it until you need it. And if something catastrophic happens to your home, you want to know that your insurance is going to step in and take care of you, so that not only are you out of your house, but you're not going to, lose all the money you have in the bank fixing your home. So I would highly recommend not leaving it to the last minute. Shop it around. Make sure that you are getting the coverage that you need for your home, that you have enough, that you know what your deductibles are going to be. The other thing to consider is flood insurance. That is something that in Houston we deal with on a pretty regular basis. And a lot of people think that they don't need it, and your mortgage company might not require it. A mortgage company will only require you to obtain flood insurance if you live in a special flood hazard area. But it's good to have, because 25% of all of the flood claims in the last 5 years have happened in low to moderate risk areas. So, and it's only right now, the rates set by FEMA are at $516 for the year. And the average flood costs the homeowner $55,000. So $516 compared to, $55,000 if you don't have it is a really big swing. Definitely something to consider. And when you're looking at your homeowner's insurance, when you're talking to an insurance agent, a good agent will walk you through all of your coverages, and they will explain it to you in a way that makes it very easy for you to understand. Insurance is just naturally filled with a lot of legal jargon, and it makes it really hard to understand sometimes. So make sure that you have a good, solid understanding of what is covered and what is not covered. And the basic homeowners insurance will cover a good amount of stuff. If a tree falls on your house, that will be covered. But there are additional coverages that you can add to a basic homeowners policy that are not included. For instance, if the toilet backs up and it floods your home, that is not something that is automatically included in a homeowner's policy. And unfortunately, things like that do happen. So that is something. Okay, are we better? So make sure that you know what is covered. Make sure that you have those additional coverages. You may not think you need them, but unfortunately those accidents with a toilet backing up or even the dishwasher having issues and flooding your home, those are very real things that do tend to happen. And if you can get that coverage from your insurance company, it's a good thing to add. The standard deductibles that homeowners are looking at for all your basic perils or any loss is going to be 1% of your dwelling coverage. And so if you have $366,000 in dwelling coverage, you're looking at a $3,660 deductible that you're going to have to pay. So make sure that you have enough in the bank to cover that if something happens. Your wind and hail deductibles are typically going to be between 2% and 5%. A lot of insurance carriers, especially ones that cover homes here in Houston, are switching to a 5% deductible for wind and hail just because of the prevalence of storms that we have down here in the Gulf Coast. So that's something that a lot of carriers are switching to. But on the plus side, your premium is lower. So if your insurance premium is rolled into your mortgage in an escrow, then it'll make your mortgage payment a little bit less. Let's see, what else? I think that's about all that I have. Are there any
Thank
questions?
you. There was one question in the chat. What was the coverage called? I think before you started talking about the hail and wind.
So the typical, so there's separate sections of a homeowner's policy. The first is your dwelling coverage, and that's going to cover the house. The second section is going to be the other structures, and that is anything that is on the property but not attached to the house. So if you have a detached garage, a pool, your fence, it even covers trees and shrubs. Your next coverage is going to be your personal property. So if you're to take the house upside down and shake it and everything falls out, it covers all that stuff. The next coverage is going to be loss of use. So if there's, say, a fire in your house and you can't stay there, the loss of use will cover your it'll cover your rental expenses if you have to rent an apartment or rent a house or even just stay in a hotel. It will also go towards meal expenses. If you are in a hotel and you have to eat out, it'll cover those expenses as well. And then you have your liability insurance, which will cover if someone comes to your house and sues you because they get hurt. And you might think, oh, well, this is my friend, they got hurt, they're not going to sue me. And they might not, but their insurance company will, because they don't want to have to pay out of pocket for these big medical bills if they got hurt on your property. So make sure that you have enough liability insurance. And then the last coverage that is in the basic policy is medical payments. So where the liability insurance is coverage if you get sued, the medical payments is essentially hush money. So it will cover the medical bills of anybody who does get hurt on your property. There's a lot of additional coverages. The one I think I was speaking about was the water backup. That's a really, really good coverage to have because stuff happens. We all know that. And Danny, I know you know that. You have 4 kids too. So stuff happens and it gets crazy. And so having that water backup coverage can be very, very beneficial. And it's usually not included in the standard homeowners policy, but it can be added for a really low premium.
Awesome. Thank you. I think that answers the question, because the water backup coverage, just to clarify, covers your dishwasher leak, correct?
Yeah, so it'll cover, it's not going to cover something that is leaking continuously, but if it's a sudden burst, so if a pipe bursts and your kitchen floods from, because of the sink or the dishwasher or wherever, it will cover that. There is coverage for things that are leaking continuously and having some issues, but that is it's a little bit more expensive coverage. But it's just something to talk to an insurance agent about. Make sure, I would highly, highly recommend that you walk through all of your coverages and know exactly what you're getting, and make sure it's enough, because a lot of times people think that they have coverage for something and then they find out that they don't, and that is not what you want to have happen.
No, excellent. Thank you, Leigh. So I am going to pass the torch again. Let me just move my slide. We're going to the Miss Webb, the lovely Webb. I'm sorry. Is somebody asking a question? No, maybe I'm hearing myself. Yes, no, wait, you guys, I see something in the chat. Let me just make sure before we move on. Nope. Nope, not there yet. I'm trying to click on the toolbar and I keep clicking on my PowerPoint, guys. Okay, no question. Miss Webb is with and I hope I don't say this wrong, because I know your company is Webb Solutions, correct? But your website is the Credit Freedom Team. You're on mute.
Webb Solutions, yes.
Webb Solutions. I'm a little slow. But I have a personal testimony, because I reached out to Miss Webb, and nobody's perfect. My husband and I, we kind of do our own things and spin as we choose, and it can get you in trouble if you're not communicating. So I am not only a supporter, I'm also a member, okay, to help make sure we stay in order with our finances. So she has a wealth of knowledge in order to get you guys savings, get your credit in line. Anything she tells us to do, we do it, okay? Please, Ms. Webb, take it away.
Thank you. And I think that you may kind of get rid of that reverb if everybody who is not speaking has their line muted. I do deal with Zoom a lot, so if people would check and make sure that they have the little microphone with the little X across it, it can actually help with that sound. But thank you so much. It is a pleasure and an honor to be here with everybody on this panel. I'm going to see if I can share my screen. Yes, the host has to give me permission to share my screen. Again, my name is BreJeanna Webb. I have been with this company for about 3 years now. I was a product of the product. Through this company, have swiftly learned the value of credit, and you all already know the importance of credit and what it can do to help you become a homeowner, and not only become a homeowner, but be able to really maximize those rates. This will stop others from sharing the screen. Yes. And so let me know if you're able to see my screen. I will not be before you very long. Are you able to see my screen? Okay, awesome. So again, my name is BreJeanna Webb. I'm a regional sales director with our amazing company. And I'm just going to talk a little bit about the value of saving money and tips on increasing your credit score. So the first tip I want to share with you, I'm going to talk about credit first. And the first tip that I want to share with you is, number one, hire a professional. So many people want to do it themselves. They call into the credit bureaus. They, go online and make these disputes. They do them through places like Credit Karma And what they're doing, they don't realize they're doing, is they're actually foregoing their right to arbitration, foregoing their right to reinvestigations. You cannot say if they come back and deny you your dispute, they will actually forego your right to come back and dispute again. And you also lose your benefit of that paper trail in case something happens if you have to sue, especially so many Americans that have been a product of identity theft. So you definitely want to hire a professional and do everything in writing. You don't want to dispute the wrong accounts. So many people will just want to dispute everything, not realizing that older accounts, 3 and 5 years old, they don't really carry the amount of weight that you think they carry anymore. And it possibly, they could really hurt you by disputing them, and your credit score could drop 10 or 20 points. Lastly, a professional knows and understands the right way to create dispute letters and to maximize your results with disputing. So let's talk about another tip, which is controlling your credit card utilization. This is really huge. Many people don't realize when you're using those credit cards, living off of them, maxing them out, that is really hurting you. That's actually 30% of how your credit score is determined, is through your credit card utilization. And so per FICO, they say that the standard rate says that your credit card utilization should be 30% of the limit of your credit cards. So anything over 30% could greatly hurt you. And my suggestion, if you know that you're looking into buying a home and taking advantage of these historic lows, my suggestion would be to go as low as 8%. And so because the lower your utilization is, the higher that will affect your score, and the higher your score can go. So I wanted to give you an example of what that looks like. So say if a person has 3 credit cards, and all 3 credit cards are $1,000 limit on each credit card. Per FICO, they say don't go past $300 per limit on those credit cards. I suggest that you go even lower and don't go past $80. You may say, well, what do I have the credit card for? It's okay if you have to make a big purchase, but already have a plan in place of how you're going to pay that back down to below $80 or lower. Don't just live off your credit scores. Don't just think this is free money. I know for me, how I destroyed my credit in my early 20s, 19 and 20 years old is when I went to college. I'm signing for a free t-shirt, not realizing that I'm signing a contract to be able to say I can handle this money and I have a plan to pay it back. So what did I do? Ran up credit cards, no plan to pay it back, borrowed a couple payments from my dad, to pay it back, but I had to come up with my own plan. And what was my plan? Forget it. I'm not paying it. I don't want it anymore. And another big mistake that I made is, and I'll talk about this in a minute, is I told them, I don't want your credit card anymore. Please close my account. I'll talk about that in a minute. So let's talk about savings and budgeting and paying off debt. This goes hand in hand, especially they talked about it, Mr. Glen talked about it a little bit earlier about saving money. And I want to talk a little bit about that today. So here are 5 steps for saving for a house. 1, you need to decide your budget. Decide what you can afford. Prior to even looking at home, decide what you can afford. Pay down your debt. The general rule of thumb is that the house should never exceed 1/3 of your total income. So, you don't want to be house poor. You don't want to be trying to get more house than you really can afford. Nowadays, they won't let you do it anyways. So what is pay your future mortgage? That means if you are renting and you know what size house you want, how much that is, do the calculations of the projected monthly mortgage for that home. Whatever it is above your rent, begin to save that extra little money between your rent and how much your projected mortgage is, and put that away. Put it towards your home that you're looking to buy. And then you prepare yourself for your home. And again, pay yourself first. Many times we're so caught up in paying our bills and getting out of debt that we never pay ourselves first. And another thing that you can do is reduce your expenses. So Cable is so expensive nowadays. Guess what? You don't need cable to get a ton of shows. You can get Netflix. You can get Hulu, Roku. It's so many other options you can get nowadays and see everything that you desire. YouTube, everything that you desire at a fraction of the cost. And you can take that money that you're spending and put it away towards your saving, towards your earnest money, towards your down payment, towards furnishing your home, decorating your home, towards going towards your insurance, and so many other important things. So it is very important to have a debt repayment plan, as your DTI affects how much home you will qualify for. And when you establish a budgeting plan, I suggest that part of your budgeting plan, you should allocate your debt and your savings into your budgeting plan. And so and another way to say it is when you establish, and this is another thing that you can do, when you're establishing your debt repayment plan, you have, a payment plan for this credit card, a payment plan for this, a repayment plan for that. One of those things that you should allocate for, make your goal savings. I want to save $10,000 or $5,000. Make that a debt for yourself. So when you're paying your debt off, put some into that savings. That goes into paying yourself first. That goes into preparing for home ownership, so that when you go in, you're prepared for an emergency. You're prepared for something to happen, and you're not going in with just enough just to get into the home. And so in conclusion, it is always a good idea to talk to a mortgage professional or a loan officer prior to looking for a home, because they can actually specifically show you what you need to improve your credit profile or increase your credit profile. They can show you the exact blueprint of what's needed to get into the home of your choice, the home of your dreams. They can kind of show you what you need, and then you can get with a credit restoration professional, and we can come up with the plan to make that happen in a good amount of time for you. Lastly, a good credit professional will always have an open line of communication with the mortgage professional and a realtor, because we're a team. Our desire is for you to fulfill your dream of home ownership. And with that in mind, from me to you, congratulations on your new home.
Love you. Thank you, Miss Webb. Thank you so much.
Thank you.
A lot of good information. And again, ladies, if you have other questions that we're just not able to get to, you will have everyone's contact information, okay? So right now, I need you guys to just get up and stretch just a little bit, okay? Just stretch it out, shake it, give yourself some energy. Everyone's saying great info, great info. Let's just check to see if we have any specific questions for you, Ms. Webb. Great info, Leigh. Okay. All right. So everybody got some energy? Do you need to take a water break? You guys good? Nobody falling asleep with all this good information, I'm sure. Let me look through here and see your faces. Yay, everybody's smiling. Beautiful people. Love it. Love it.
Hey, can you hear me okay?
Yes.
Hey, first, I want to really thank her for that presentation. It is really apropos to the mortgage criteria. Just one of the things that I really want to make a comment that's really, really important when she was talking about disputing items on the credit report. It is very important to make sure that before one applies for a mortgage loan, that the dispute comments have been removed from the credit report. Because there is no mortgage company that will accept disputes being written on the credit report. That is very, very important. And most people try to do that on their own, and the item is gone, the dispute comment is left, and the credit application is declined. Second thing, real quick, for an individual to do a quick upgrade of a credit report, if they have low credit scores, they can find someone who can add them on as an authorized user, mom, dad, sister, brother, cousin, whoever. just make sure that they stay in line with the criteria that she mentioned about the 30% below the credit line. That will tremendously help, and it does not affect that person's credit, neither will it the person who is obtaining that authorization credit be hurt if it becomes necessary in the future.
So
That's a good thing to know.
we do have a question in the queue. They're asking, so who do we call first? Do we call Glen first, or do we call Miss Webb? So you would
Well, I'll say
definitely
this.
call.
Yeah, most people know what their credit scores are.
Yeah.
Don't be fooled. You know, they'll ask. You can ask them what's your credit score. I don't know. Most of them know. If your credit score is not at least a 640, you need to call your mortgage officer, or you need to call Ms. Webb. Because most of the time, if you call the mortgage officer, I'm going to pull your credit, and it's going to be a mortgage credit report that is scored by an algorithm designed for mortgage purchase, not a consumer credit report that you see out there on, what's that favorite one everyone uses? Credit Karma. That is a consumer credit report. I'm going to pull a mortgage credit report for you. I will send you a full copy of it that is secured by the last 4 digits of your social, and then you can pass that on to the credit repair person that just gave the presentation. That way she will know what she's looking at, and she will know exactly how to instruct you to move forward. Some small stuff I will do, but the major stuff, we leave that to her.
So there is a website if you all don't have any idea of where your credit is, and I just put it in the chat, freeannualcreditreport.com. I know previously you were allowed one free report every year, and I think with COVID they up the ante, like you could get one free every month or something like that. I'm not sure.
It's actually annualcreditreport.com. It's one free credit report every week until April of next year, I believe.
Okay, I'm updating that.
Yeah, and there are some reporting agencies out there that will give you all 3 of them, but make sure if it is the availability for all 3, make sure that it is all 3 that is coming directly from the credit reporting agencies, not some third party, okay? Because I'm telling you, the algorithm that they use to score for a mortgage credit report is so different from that of a consumer report. And while you might see a 740 score, when you pull one and they know you're applying for mortgage, that 740 could very well look like 680 or 700, okay?
Awesome, great information. Thank you all. So I'm gonna roll it over. Everybody got their water, your coffee, your vodka, whatever you feel like drinking. I'm gonna roll it over. I believe I'm back, hostess. Let me share my screen. Miss Webb, am I back the host?
I was writing. Where do I look to see if here's the host?
Under participants.
I can still click on it, so yeah, I'm still the host.
Okay, switch it back over to me, please.
Now you're getting into some deep stuff.
Under participants.
Yeah, I'm looking at that. Participants. Yeah, I was clicking on participants right here. Okay, more. Here's your name. Make host. There we go.
Thank you.
Okay, sorry about that.
No problem. All righty. So we're moving on to our title portion. This is Mr. E.L. Craine with BRPS title. You guys, this man does a lot. I honestly don't think he sleeps, to be honest with you. He does educational classes. He has mastermind groups all over, tons of opportunities. If you're in real estate, such as myself, and I always try to shadow him, grab his coattail whenever I have the opportunity, just a wealth of knowledge. Mr. E.L. Craine, you guys.
Can you hear me?
Yes, sir.
Hello, thank you for having me, Danny. I appreciate that. I like to go into the title portion by speaking to the value of title. Title is really just insurance. We're insuring the transaction that the bank is funding. And we're ensuring the fact that the person that is selling you the house has the right to sell you the house. That's what title does. It's insurance. It's ensuring that you can own that real property. That's what title insurance is about. I keep it very, very simple. I get to my part, I say, when you get to me, you get to do the happy dance. You're getting ready to sign all those papers, getting ready to pass that check across the table. You're going to get the keys from either the builder or the seller. Then you get to do the happy dance. But to get to do the happy dance, it's more about what you've done to get there. You heard from Ms. Webb, you heard from the mortgage lender, you heard from the insurance. It takes sacrifice to realize home ownership. What are you willing to give up? What are you willing to set aside? In a live portion of a class like this, I always ask the question, raise your hand if you've ever been to a concert. Most people raise their hand. I then say, do you buy a new outfit to go to that concert? Most people raise their hand. And then I have to inform them, you do realize they can't see you. So you're literally paying money that could have gone into your savings towards buying a home. It takes sacrifice. What are you willing to give up to secure purchasing a home? You don't get to do the happy dance unless you make sacrifices to own that home. That means caretaking your credit. That means savings. That means giving up waste. The mortgage lender can tell you better than I can. I used to be in that business years ago, but this is the way it works. We don't realize how much money we waste. When I was a banker years ago, I literally told a couple they can afford $2,500 a month to buy a house. And they was like, oh, no, we can't. I said, give me your credit card bills, and I'm going to show you why. They ate breakfast, lunch, and dinner out every day, every month. The wife didn't cook. The husband could cook, but he felt like it would be easier for them to go out and eat every day. They were spending over $2,000 a month, breakfast, lunch, and dinner. All you have to do is equate it this way. If a couple is spending $20 a day on breakfast, that's $140 a week. People don't take that into account. It's not what you spend that day, it's what you spend that week, what you spend that month. It's all about sacrifice. You don't get to the title company to do the happy dance unless it's sacrifice. And as somebody brought about earnest money, thank you. When it comes to the earnest money, you need to save that money because the earnest money is placed with the title company. We hold that money until it's closing time. The insurance agreement is placed with the title company. We hold that agreement until it's time to pay that premium, because that premium is going to be a part of your debt to income ratio. It comes down, again, my favorite word, to get to do the happy dance at the title company is about sacrifice. What are you willing to give up? Earnest money takes money. Insurance premium takes money. Down payment takes money. Home warranty takes money. All these things come into account. When you are the title company, Our job is to make sure that everything needs to be paid to transfer title from one owner to you, the new owner. But what does it take to get there? Most people are not willing to sacrifice to get there. When it comes to title, you never know what is on your title commitment. For example, when you're selling a home, I suggest people pull title on their home at least once a year. Costs 125 bucks. Just because the city came out and fixed that crack or that broken driveway and you didn't get a bill, they might have put a lien on your property. If you didn't adhere to all of your homeowners association responsibilities, they might have put a lien on your property. So you thinking you're selling this house and you're going to walk away with $10,000. Well, after all the fines and taxes and everything else, you might be walking away with $2,000. You need to understand your home and the responsibilities of home ownership. Title partners are here to facilitate that action on your behalf, buying or selling. Buying, making sure that the person you're buying from can sell that house. There's still a lot of fraud out there. There are a lot of things to inhibit and prohibit fraud, but they're still out there, you know? And on the selling side, you need to know what you owe. You need to know about the liens and encumbrances that's going to stop you from selling a house. My favorite story to tell is 11 children from 4 different wives who all showed up at title one time. But none of these children knew about the other wives or the other children. It was a brouhaha, to say the least. You have to know everybody has a story, especially when it comes to title. You need to know what's going on with the real property. We insure real property transactions. And I'm going to say it again, every word, sacrifice. Hello? Can you hear me now? I'm a Verizon guy. Title is truly about protecting your real property transaction, and making sure you have a clean transaction so that you can literally plan your real estate legacy. Title is about insurance, insuring your transaction, buying and selling. I keep it simple, I keep it brief. That is title.
Awesome. Thank you, Mr. Craine. Perfect timing, you all. We're at 3:34. I just have a few more slides. And we'll open it for more questions if anybody has any. So this is Mrs. Webb's presentation that she already showed you. Give me 2 seconds. Flip, flip, flip. So we've sold, can you guys hear me? Yes.
Yes.
Okay, awesome. So we've talked to you about what we do and the things that you can do to get to your home, because ultimately that's what it's about. Starting your legacy, investing in property, whether it be any one of those 6 types of properties that we mentioned earlier. So what do you need? What is essential for you? We talked about savings. We talked about sacrifice, having a plan, having a budget. But here are 4 other things, well, actually 5, that are also important, because it is a big investment. It can get rocky. There will be emotions. You need faith, and you need to have tough skin. Okay. Don't do the happy dance until you get the title, because a lot can happen in between time. Okay. Keep an open mind. You know, you may have this dream home in mind or something that you've seen on HAR. You know, you start looking, your eyes get big, and then, you know, your budget just doesn't match. So keep an open mind. Also, very important, and several of us have touched on this already, the appropriate credit score is fundamental. Okay. So if you do need credit repair assistance, or if the mortgage lender does tell you there are certain steps you need to take, adhere to those. A delay in time doesn't mean you will not accomplish your dream. It just means you have to take different steps to get there, a little bit longer to get there than you may have hoped. Another essential portion is savings. So I'm not going to beat that dead horse anymore. Okay. What steps do I take next? Consult with a top real estate professional. Okay. The pre-approval process comes next. Discuss the details of the home search. What side of town you want to live on. Your timeline of getting there. Preview the property. Oh, it's good to do virtual open houses now. It's very popular due to COVID. It's good to look at the pictures on HAR, but I always recommend, please look at these properties in person. Please, please, please. Now, there are investors and more seasoned buyers who make purchases internationally, make purchases across borders, or, you know, across states, sight unseen. And that's what they do. That's their business. They have experience with it. They're comfortable. But especially for a first-time home buyer, please don't rely on that virtual tour. Please don't rely on those pictures. There's I guess a year or so ago, there was a multi-million-dollar property listed in River Oaks. It looked fabulous. They posted the pictures when the home was just built, right? So you got this chandelier, this double staircase going up, beautiful, immaculate home. And when the buyers went to see the property in person, it was horrible. There was boarded up windows, spray paint all over. The house had been abandoned, but the pictures didn't tell you that, okay? So make sure you physically see these properties. Okay, you find a home you like, you make an offer, you close and do the happy dance. Like Glen mentioned before, about 30 to 45 days from the time you put in an offer to the time you close because of COVID, refinancing. There's a lot going on, okay? I'm getting some chats. I don't know if you all can see the chat, but okay, there's the prime example. It happens, guys, and we do expect people to, you know, be honest, but not everybody's like you and me, so be aware. I'm sorry that happened to you. So my job, or your realtor's job, is general guidance through the process, okay? Negotiating your deal to protect your investment, whatever you decide. Single family, say you want to do a multifamily, like a duplex, and you decide, you know what, I'm going to live on one side, rent out the other side. Okay, that's a possibility. And to be honest, if I would have known that 10 years ago, I would not have built the home that I built. You know, before, I think I only had one kid at the time. We would have just stayed in a duplex on one side and rented out the other and let that pay for our entire mortgage. You know, so there's different ways to have an investment. There's different ways to have home ownership. Okay, and that's what we're here to explain to you. Whatever avenue works best for you. We also draw up and amend, manage your paperwork for your emotional support. We're not therapists by trade, but yeah, we're there for you. And I honestly try to be the buffer for my clients, especially with all things negative. That doesn't say that I don't express that information to the buyer or the seller, but we try to shield you all because there's a lot of ups and downs. We're also the point of contact post-close for home matters. So that means after you're in your home and you need to protest those taxes, or, you know, you need you need a referral for home security or, like I said, interior designer, what have you, whatever else comes down the line, referrals for friends and families, we're there for you. And this list, you guys, is so funny. If I show this to another realtor, they'll laugh. Like, that's it? That's all you put on your slide? We do a lot behind the scenes on your behalf. There's a lot that we do that we don't share with the clients because a lot of people will think, oh my God, how do you get all that done? Aren't you overwhelmed? But that's our job. That's what we do. But this list is not in its entirety. That's it, you guys. I so appreciate you all for taking the time to be here. Thank you to all the presenters for giving us your knowledge and your expertise in your industry. It's so necessary that we educate everyone interested in the home buying process. I will stop my share and just ask, let's see how many more participants we have on. There's a few still hanging on. Any questions for us? We got about 15 minutes or so. So we have a question, Glenn. I don't know if you want to answer this one. I won't step in your territory. Is there ever a way to find out a ballpark number of what someone can get approved for?
Yes, it's easy sometimes for a person who is interested in purchasing a home to do that math at home. I can give you the formula that will help you get an idea of what you can afford, or you can call me and I will also provide you a sheet that you can use to plug numbers in. The idea here is debt to income ratio, DTI. That means that you take all of your debts that show on your credit report. Again, the debt that shows on your credit report, not the balances, but the payments, the minimum required monthly payment that shows on your credit report for your debt, add that up. Then, if you have an idea of what you want your monthly payment to be for your new home, you can add that in. If you want to leave that out to later, you can leave that out. But the first step is to add up all the debt and then add up all of your gross monthly income that comes into your house. It's important that you know how much you make an hour, how much you get paid. Keep up with that. That's important information. What is the gross monthly income that comes into your house before anybody takes any money out? Debt divided by gross monthly income gives you your debt to income ratio. If that debt to income ratio is already over 45, you probably cannot afford a house right now. All of the debts on the credit report divided by the gross monthly income that comes into the house. If it comes out to be 45, you are probably not ready. If it comes out to be possibly somewhere around 20%, 25%, you've got a shot at home ownership, because you can go all the way up to 50% of the monthly income that comes into your. I hope that answers your question. If not, again, you guys can call me if you want to take my cell. My cell is 281-684-5064. I don't answer it on Sunday when I'm in church or when I'm having devotion with family. Other than that, I think I answer it in my sleep. 281-684-5064. Okay.
Thank you for that, Glenn. And he's another one that doesn't get any sleep, y'all. Okay, I don't see any more chat questions. And again, ladies, I'm going to provide all of the presenters' contact information for you all. Feel free to reach out if you have any other questions or concerns or want to start the process. I still appreciate seeing all of your lovely faces. I wait for COVID to be over so we can do these homebuyer workshops in person, so I can feed you, hug you, shake your hand, okay? But it is what it is. You all stay safe. Does anybody want to make a last comment before we get out of here? We did great on time. Nope. Nope.
I do. I want to say this to everybody, anyone who's listening that might be interested in purchasing a home. Whatever you do, make sure you are prepared to be open and transparent with your lender, your loan officer. You cannot come into this transaction thinking and being nervous about, I don't want you to look at this, I don't want you to see that, because the only way one can help you achieve your dream, you have to be open and transparent. If you're talking with me, I need to know what you know, whether I use the information or not. I know what's important. I'm the professional. Let me handle your transaction and be open and honest with me. If you're dealing with a realtor, deal with the realtor. Stop listening to mommy and them who may have never purchased a home, who have never did a transaction, who is not up to date on what is happening in this economy now. That's why you get a realtor. That's why you get a professional. Listen to them and stop talking to all the people who are lying to you about the great deal that they got, and because they're not telling you the whole story. Every situation is different. Trust us as professionals. We've been doing this a long time, and we have but one goal: to get you into your home and make you a homeowner.
Great advice, Glenn. And just to piggyback off Glenn, as a realtor, we don't see your financial information. All we see is that approval letter. So never feel like your realtor is going to be in your finances, because we're not. We don't see that information. All righty, guys. Thank you so much. I still appreciate you all taking your time on this lovely Saturday, fall-ish weather that we have today in Houston. So please go out and enjoy the rest of your day. Again, I'm going to be sending you the contact information. You need anything from me, you have my contact information as well. I so appreciate you. Be safe. Goodbye, everyone.
Great job.